What's up, guys? It's Graham here, and you better buckle up because the entire car market is fucked. For the first time ever in history, the average price of a new car is about to surpass $50,000.
CEO Jensen Huang is now the 9th richest person in the world, with a fortune valued at $137.4 billion, thanks to a continued surge in the price of Nvidia shares.
We have a deal with China, but the deal with Canada has fallen through. Everybody has an opinion. Financial opinions are like armpits. Everybody's got a couple, and some stink more than others. What I want you to do.
Time is the most valuable asset, and I save it for you. My name's Jason, I'm your host. Welcome to the week in YouTube Finance.
What's up, guys? It's Graham here, and you better buckle up because the entire car market is fucked. For the first time ever in history, the average price of a new car is about to surpass $50,000. Auto loan payments are exceeding $745 a month, and with interest rates near their all-time highs, Americans are now officially beginning to fall behind on their payments. This is why it's so important that we break down exactly why cars have become America's #1 wealth killer, why used car prices are spiking again, and then what the data says is most likely going to happen over the next year, because there are 3 points that you need to be made aware of if you want to save a ton of money. Although before we start, if you appreciate videos like this or even find them helpful, it would mean the world to me if you gave the like button a little gas or subscribed if you haven't done that already. I know it's annoying when I ask for it, but I promise it's going to be a smooth ride. And as a thank you for doing that, I promise to stop making bad car puns. So thanks so much, and also a big thank you to Helium Mobile for sponsoring this video, but more on that later. Alright, so first of all, we gotta talk about the boogeyman for anybody who owns a vehicle, and that would be depreciation. Like, here's the thing, for the longest time, when you think about car prices, you'd imagine a chart like this. In a normal market, a new car is expected to lose anywhere from 9 to 18% the moment you drive it off the lot. And then from there, prices continue to fall by an additional 10 to 20% a year until after 5 years of ownership, you're left with about 40% of the price that you paid. However, these last few years have completely messed that up. Because of a shortage of auto manufacturing, a limited supply of parts, record low interest rates, and a surge of demand, used car prices began to defy the laws of gravity by going up in price. For instance, in 2021, used car prices were 40% higher than the year prior, meaning back then you could literally go and buy a car, drive it around for free, and then sell it a few years later for a massive profit. One estimate suggesting that each car might cost $2,000 more than it did previously. But in terms of where prices are realistically headed over the next year and what you could do to save yourself as much money as possible, here's what you came for. Overall, it seems like most experts believe that used car prices will continue to see a gradual downtrend over the next year, especially if defaults increase and inventories stay high. Some forecasts even suggest that new car prices could fall a few percent as competition heats up. Ideally, for most people, they would be best off just sticking with a good, used, reliable car that they could comfortably afford, that they could pay off as fast as possible, and then keep until it doesn't run anymore. Or if you're thinking of selling your car because you could no longer afford the payments, now is a pretty good time still to sell and move on to something that's going to cost you a lot less, especially if it's an EV. Of course, let me know what you think of all of this down below in the comments. I will do my best to read and reply to as many of you as I can, and if you want to be kept up to date on the car market, I'd highly recommend Car Edge, who I'll also link to down below in the description. Thanks so much for watching, and until next time.
Thank you, Graham. So what do you think? Are you in the market to buy a new car, used car? Are you going to go brave those interest rates and stuff like that? Let me know. Thank you so much.
Nvidia CEO Jensen Huang is now the 9th richest person in the world, with a fortune valued at $137.4 billion, thanks to a continued surge in the price of Nvidia shares. Huang's 3% stake in Nvidia, totaling more than 859 million shares, has increased by about $11.6 billion over the last 5 trading sessions. As of around 1:10 p.m. Eastern Time Friday, Nvidia shares rose by more than 1.6% to over $157.60 a share. Since the stock opened tracking on Monday at $142.50, there's been an increase of more than 10%. Wedbush securities analyst suggested in a note Friday that Nvidia and Microsoft will each hit a $4 trillion market cap this summer and $5 trillion over the next 18 months, as he referred to the companies as the, quote, poster children, end quote, of AI. Nvidia reported higher than expected earnings and revenue through its first quarter in May, as Huang told investors the global demand for Nvidia's AI infrastructure was incredibly strong. Nvidia ranks ahead of Microsoft as the world's largest firm with a $3.83 trillion valuation as of Friday. The latest winning streak for Nvidia follows concerns the company would be hit by President Donald Trump's tariffs and export controls on China. The US imposed export restrictions on Nvidia's H20 AI chips to China earlier this year. Huang said these restrictions would lock Nvidia out of a $50 billion Chinese market and argued the export changes cut sales without a grace period. Nvidia's stock has also increased by 81.7% since hitting a 52-week low of $86.62 on April 7th, though shares are up just under 14% on the year. Loop Capital analysts raised their price target for Nvidia's stock to $250 from $175 as they believed Nvidia could benefit from stronger than anticipated demand for its products. According to FactSet, this is above the average $173 forecast among Wall Street analysts. For more on this story, check out the article at the link in the description.
Thank you, Forbes. So have you put some money behind Nvidia? I did. I think I threw about $30, big baller type of stuff. How about you? What kind of stuff are you investing in these days? Share the wealth. Well, share the information.
President Trump says that the trade war with China is officially over because China has signed a trade deal and China agrees. They said, quote, both sides have confirmed further details on this framework, and this good news got investors so excited that we saw the stock market break new record highs because investors are hoping that this new trade deal is going to help the economy boom and it's going to help the stock market boom even more. But let's dig a little bit deeper to understand what this new trade deal is, because we've seen a lot of changes. Before President Trump entered the White House, the United States did have tariffs on Chinese goods. It was at a baseline of 3%. China also had tariffs on United States goods. They had a baseline tariff of around 8%. And this is what President Trump said was unfair. China is taxing us more than we are taxing them. That was when President Trump entered the White House and raised tariffs on many countries, including China. And President Trump jacked up tariffs on China all the way to 145%. And China reciprocated, raising tariffs on United States goods up to 125%, which put business with China on hold. Because if you're a business and now you have to pay 145% more, you're gonna have to sell your products for a whole lot more. And this was painful for our economy because China is the third largest trading partner with the United States after Mexico, after Canada. I don't know what's gonna happen on July 9th. We could get good news, we can get bad news, but in any case, it creates opportunity. When markets went down in February on the announcement of tariffs, in March on the announcement of tariffs, in April on the announcement of tariffs, it created buying opportunity every single time if you knew what you were doing, if you had a strategy. Now, if you're sitting there panicking, you're selling stocks, you're the one that's selling stocks to somebody else who's buying them for a big discount. But this is where everybody says, what if we enter a recession? Well, we might enter a recession. We could see the stock market fall by 20, 30, 40, 50%. Yeah, it's very stressful to invest your money. But when you say, I want to invest for the next 10 years, the next 20 years, now it's not as stressful because what happens over the next few years doesn't really matter. We know that recessions are going to happen. We know we're going to see some really severe recessions. But if you have enough time, you can withstand those recessions and use those downturns as an opportunity to buy even more. And with that, I will see you on YouTube on Monday.
Well, thank you so much for being here. This is the 26th week in a row that I've done this, so pat myself on the back. The goal is 100. I made it half a year so far, is that right? 26 weeks. Wow. Anyway, thank you so much for being here. Do me a favor, throw me a like if you made it this far. Hopefully I've earned your subscription. I would love to see you next week. I'll catch you on Sunday. Take care. See you soon.